A few weeks ago, Michael Burry, the Big Short, known as the Big Short, made a well-timed bet against AI stocks. And last week, the Nasdaq Composite came off 3%, which is much less than the 10% it came off in April. I guess the devil is in the detail, and Nvidia was down 7% last week. But what is the big fuss about the market correction last week? And is it a market correction, or do you think it's the start of something else?
Okay, first of all, I believe that you can speak about a consolidation, more consolidation of the market. Usually when you get over 10% drawdown, you can speak about a correction. We are just at the beginning of maybe which is something that is a consolidation of the market. What is interesting, and it was in your question, is the fact that the AI stocks suffered a much bigger blow than most of the stock market at the end of the day. And the reason is to be found in the fact that people have doubt about investment, AI investments. Why? Because there is this story about Meta. Meta came out with a huge program for increasing investment next year, and they are going to finance that with bond issuance. They are already financing it through a bond issuance. So people are getting worried that this strong investment process is going to lead the Magnificent Seven companies, which are cash flow rich. Those companies maybe are going now to leverage this financing of investment through bond issuance. And that's the reason why you had such a huge setback for AI. And in a way, we lost in the course of the last 5 days, 1 trillion market cap in the 8 biggest stocks of the stock exchange in the US related to AI. So it tells you that there is some worry coming among investors about the investment frenzy.
Chinese AI technology seems to be catching up with Silicon Valley. Is that a concern as far as you're concerned?
Yes, it is a concern. And it is a concern because, the CEO of NVIDIA came with a comment about the fact that the US are going to lose the race against China when it comes to AI. And the point he was bringing forward is essential. It's energy. Energy is a key element in AI revolution because you really need to have access to energy in order to be able to promote those big data centers and the work of the models and to enhance AI over time. What is very interesting is that the Chinese government issues some statements for local government to give subsidies to energy prices in order for the AI companies to be able really to compete. And this is the point that the CEO of NVIDIA was bringing forward, is the fact that we need to be careful because the Chinese economy and the Chinese AI revolution is supported by very low price of energy, which is a key an essential raw material for the AI revolution.
With the current US government shutdown, we don't have any official numbers on jobs and employment in the US. However, there's a few indicators showing that hiring has reduced and layoffs have increased. Is this a sign that AI technology is leading to a reduced workforce, do you think?
You could consider, we don't have sufficient element to consider that this is all related to the AI. There is certainly a part of the problem which is connected to AI because you can reduce your logistic chain and etc. through AI. But this is not, and this is also one of the reasons why the market was so unsettled during this week, because the number that was published showed that from January up to September, the US economy has destroyed 1 million jobs. This is a number that was not seen since 2003. So it tells you that there is a slowdown in the labor market. This is something that everybody was fearing because we know for the last few months, the non-farm payrolls, when they were published, showed that there was clearly a deceleration in the trend of job creation. But now it tells you that maybe the labor market is in a worse shape than many expected. And this is also one of the reasons that maybe over the course of the last 5 days of last week, we had an increase in the recession fear among investors. To my point of view, this is not necessarily something that is bad because there was so much consensus about the fact that nothing else than a soft landing could happen in the US that it was becoming very, very dangerous, pushing the market higher and higher, valuation higher and higher. And I think that this is a very good news at the end of the day if there is some fear of recession coming back into the market for the coming weeks.
Do you think this could encourage the Fed to make a move in well, December, for instance, in terms of rates? Or are you expecting them to hold off until next year now?
The big question and I think that they are going to lower interest rate, despite the fact that Mr. Powell said that it was not a done deal. I think that they are going to lower interest rates because the condition would justify that. And but it would be a long discussion why I think so. The key element, to my point of view, is the story of quantitative tightening, because you know that the Fed has decided that now they are going to stop quantitative tightening. Some investors believe that they could stop it before December, because this is what they announced, that they would stop quantitative tightening in December. I don't think that they are going to bring that forward in November. They will wait the deadline that they have set. And I believe that you're going to see quantitative easing again in the US. You have some sign on the money market that there is some tension in the US, and the Fed will fight this tension. And the way to do it is through quantitative easing.
Concerning the US government shutdown, do you have the lowdown on when you think this long government shutdown could end?
Not really, but I think that what happened over the weekend in the US, in the election in the US, is putting a lot of pressure on the Republican. The fact that they lost two states, two governors were elected were Democrats, and the fact that the New York City elected a Democrat as the mayor is a warning sign for the Republican. Nobody is going to win with a long shutdown, especially when you have food tickets that now are rationed for people who really need it. And I think that it's putting a lot of pressure. When is it going to end? The sooner the better, to my point of view, because it's costing the US economy a lot of money, and for something that is not justifiable. And we will see. I hope that it's going to be in the next few weeks.
There is some good news in the US, and that's the earnings round we've just had, which is showing 12% growth in earnings for US companies in the S&P 500. Surely this is unexpected. We wouldn't have thought this a year ago, and it's unprecedented, surely, to have this length of time where we have successive double-digit growth in earnings.
You are perfectly right. And you know, the third quarter up to now, when you look at the Russell 3000, which represent the biggest index of a US company, is showing that you have 11% growth of EPS year on year. This is unseen since the recovery after the COVID. So it tells you a lot, because the COVID was an exceptional situation. So to be able to provide the investors with such a high level of earnings is quite impressive. Moreover, what everybody needs to have in mind is also that for the fourth quarter now, the estimate is 7.5%. And what is also very interesting is that in the course of the last few quarters, at the beginning of the quarter, the expectation were low, and the effective result was much higher than the expectation. So it's a very, very solid year in terms of earning per share for the US economy. Clearly, what has impacted the numbers positively is the fact that the trade war was not as big as expected. Second, you had a weaker dollar, which supported the earning for a US company. So it's a very, very solid. And this is an argument, to my point of view, that people need to keep in mind, because it tells you that if you put things together, you have different elements that can support a continuation of the rally, if you speak not in terms of short-term consolidation. But in the medium term, you need to have ample liquidity. Monetary policy is going to be loosened, to my point of view, until the spring of next year. You could have quantitative easing coming back. You have solid earnings coming from a US company. And even if it's going to be a slowdown, there will be a slowdown in the US economy in the very short term. It's not going to be a recession, to my point of view. All those elements would justify to consider that the risk of a significant correction on the US equity market is limited for the coming months.
Therefore, you see this move as an opportunity rather than something to be concerned about.
Yes, I agree with you. It would be a buying opportunity at one point selectively, and you need to define which kind of stock you want to purchase. Do you want to buy the market in total? I do not agree necessarily, but nevertheless, there will be some opportunity. Will it be tomorrow? No, wait for a little bit longer. I think that this consolidation phase can last a little bit longer, and then there will be opportunities to purchase.
By the sounds of what you're saying, you are You are saying that we can continue with the AI theme in terms of investments.
There is, yes, the AI theme, but at the end of the day, the main problem or the main issue is that you need to see an extension of the earnings rally, if you want, the earning increase. What is interesting is that, if I remember well, during the second quarter, there were mainly two segments of the market which were growing. When you look at the number that were produced during the current earnings season, there is an extension to other sectors that contribute more significantly. What I would like to see in the US is really an extension of the good earning numbers out of the AI and into the other segment of the economy. So that's, to my point of view, something that you need to watch very closely, really to see if there is this extension out of the AI, because otherwise the AI become the risk that the bubble is really becoming something of a threat on the AI is going to be much higher. So that's what I would like to see. Extension.
In other words, you are looking for a trickle down effect to take place and start doing its work on, for instance, mid caps or small caps as well.
Yes, and other segment of the big cap and big cap companies, and to the small and mid cap. And by the way, if you have really the end of the quantitative tightening, and I believe there will be an end to the quantitative tightening. It's a long discussion again, but some people believe, and I believe so, that this is a way to control the yield curve in the US. And I believe that what is going to happen is that the pressure on the long-term bond is going to be more on the downside than on the upside. And so I think that if the long-term interest rates in the US keep going down, it means that it should support small and mid-cap company in the US.
Are you expecting the transition to quantitative easing to start as soon as March, for instance?
It should begin, to my point of view, by the end of the year, yes.
By the end of this year?
Yes. Mm-hmm. I believe that they are going to increase the purchase of assets, and especially treasury bonds.
Turning to gold now, the dollar has stabilized. Inflation isn't running away from us yet. What are the factors that would make us get back into gold very, very quickly? And what is the level now?
We are currently trading around between 3,950 and 4,000. And we had a bit of a test lower during the consolidation. The first element is the interest rates. Because when interest rates go down, the opportunity cost of holding gold is reduced. And that's the first element that is going to support the gold price over the medium term. That's the reason why I still believe that in 2026, the gold price is going to test again the 4,500 that it reached in the course of the last few months. The second element is the fact that I do consider that the desire by investor to, and especially sovereign investor, to get out of some of their US dollar position in foreign exchange that they hold at the central bank, I believe that they want to diversify and continue to diversify their reserves. Gold is the first asset that can provide them with this element. The third one is that I still defend the scenario of a lower dollar in the medium term. I still defend the idea that the US dollar is going to reach 120 to 125 in the course of the next 12 months. And so those three elements, to my point of view, are the reason why we should continue to believe in the scenario of a higher price of gold in the medium term.
We have some economic data coming out this week. What are you most looking forward to?
I will look mainly at China. I want to see the numbers that are going to come from China, and especially the retail sales. I will look also at the investment. They are going to provide us those two numbers. Last week, we had some numbers concerning the trade balance. Import and export were weak, and especially exports, and it was a kind of surprise for the market. So I think that we need to take a very close look at what is coming from China, because this is also a key element in the current market environment. You know that there are more and more people who are getting, I would say, more positive on what is going to happen in China, because we can see that for the first time in many quarters, you have a turnaround in earning expectation. And this has supported some money flows going into China and into emerging market in particular. So I believe that those numbers are going to be very important, because they could justify this investment theme for the coming months, or they can say that this investment theme is not a valid one. So I will take a look very closely to those numbers.
If those numbers are bad, what does that encourage us to do in our Western European markets and US markets?
I think it will be if those numbers are bad and if they show that the not only the main driver of the economic activity in China, which has been exports and investment in the course of the last few months, is under pressure, and then you have domestic demand, which is already under pressure, not being able to play a bigger part, then it will have two consequences. First, we need to see if the government is going to intervene again and trying to support consumption in China. If we do not have that, it will reinforce the case for the non-diversification out of US companies. And this is a major investment theme that is at play currently in the market, because in the course of the last few months, you could see some flow gain going into the emerging market. So it's going to be very important to see those numbers. And it could again bring back forward once again the investment theme that people had a lot of doubt during 2025 at some points, which is the US exceptionalism. And if China is not able to provide us with some good numbers, then people maybe are going to say, okay, what the hell? What do I want to get out of the US? US equity are the only place where I want to be.
Okay, US CPI and PPI numbers?
Very important again, we will need to have confirmation that it's remained under control, that the numbers are not going to go up too much. And this is going to be watched very closely too.
Francois, I think that's all we've got time for. Thank you very much indeed. And I wish you a lovely week, and I look forward to speaking to you next Monday.
Thank you. You have a good week too. Bye-bye. See you next week.
See you now. Bye-bye.
Bye-bye.